recording, so that's good. I'm gonna talk really quietly because my fiance is sleeping. I'm actually gonna close the door so she can't hear me. Alright, I'm back. I apologize about that. So, I'm gonna take a look at the weekly chart here. I'll start off, real quick review. Like I said in the last video, ignore all my notes that we don't get confused, but we've had a lot of action since my last video. Obviously, a lot of my analysis has been panning out, which is something that you all should be annotating and utilizing that to reinforce positive thinking. So we have a weekly chart. I like the idea that it used a white box, like a white rectangle tool here to annotate this volume imbalance on the weekly chart. And I really like the fact that he mentioned that he's using the delivery contract month for the index for the S&P and just asset classes in general. I think it's actually a really good way to utilize your contracts instead of using the continuous contract, because it doesn't actually show those voids like it does on this. I don't know why. Oh, the text is different, that's why. I'm not paying attention to what I'm doing. So go to style, background, and we'll throw this as a gray box, that way you can see it. This above it, right here, this box, this gray one, or red, I'm colorblind, so it doesn't really matter, but this is two separate things in my opinion. But if you were to walk into this chart and say this guy doesn't know what he's talking about with this right here, I would say, sure, I don't know what I'm talking about, because I'm not 100% confident that this is liquidity void, but I'm pretty sure it is because he showed it on the NASDAQ. So ultimately, the low-hanging fruit, in my opinion, if you're trading on the weekly chart and you bought in this imbalance, your exit for a partial could be right here at the touch of this volume imbalance and above the short-term high. And then obviously you can shoot above this candle's high too, because the NASDAQ has already done its job in taking out that high almost. Like, in my opinion, I think that the NASDAQ is going to take out the short-term high this week, right here, this one, because the S&P has already worked its way up to taking out these highs. NASDAQ's already done that, so the S&P has to play catch up. So I believe this short-term high is going to get taken out, and we're going to reach up into this imbalance. So let's look at the S&P with the weekly chart, and you'll see that we have all this. We have this imbalance right here. We have this imbalance up here. We have this volume imbalance. We just have a lot of PD arrays above the market that we could possibly reach into. Now if we go look at the continuous chart that I have here, or ES, you can see that we don't exactly have the same thing here. Like there's actually a volume here, like it was traded. Obviously the continuous chart has taken out this short-term high, and I think it's going to be working up into here. And then eventually we could probably see monthly order block here being hit, possibly violated, because I think the economy is going to be growing for the next year or so, but I don't know anything after that. The elections is it's just very indecisive, and I would like to just stay away from it. So let's go back to our continuous or our futures market with the contract delivery month for June, I believe. Yeah, this one's about to expire here soon. So we're on Dow Jones. Obviously, I expect the Dow Jones to actually come up and take all this garbage out. It's just so sloppy, it hasn't done it yet, but this is all balanced price range. Here, this is balanced. It came down, it's left it as a balanced price range. It came through here, rebalance this. I don't see any need for it to reach down in here because it's already rebalanced it. I might leave these lows intact. I'm not 100% sure on that. I need to see some short-term shift in market structure to support that idea. So if you're trading Dow, don't ask me questions. It's a sloppy market. I don't really care for it. Like I said, well, not like I said, but like ICT chooses to not trade it, I am the opinion that that's probably a good idea because it's really sloppy. So we have an old new week opening gap right here. You'll have to go through that yourself and find that. But let's narrow it down. So hourly chart, beautiful hourly chart. Very difficult week last week. I kind of got chopped up a little bit and wrecked down here. But I took 2 losing trades last week, and I was completely right about all this getting taken out right here. All this buy side, like it's just like it's kind of like a nice little trend line pattern that retail sees, and they just went right through it. Don't read that. That's cycle. I'm not trying that. No. I'm just repeating what ICT says. Gun to my head. I think it's going down here. This was just for my fiance. But to come today, it's really embarrassing, especially for the women. I don't need you guys to see that. A lot of this is just old stuff that I keep for myself. Got to screenshot it still, and just a lot of stuff going on here. So just ignore all that. But I did mention, or if I didn't, I did in my head expect that we would take all this out, and on the daily chart, I expected us on Friday, with the price action that we had, we would actually roll over and take out these relatively equal highs. And then if we were able to do that on Friday, we could measure the wick. This wick, or you could do this, but that's pushing it, in my opinion, because you literally you didn't even get the quarter level of that, so you were expecting too much. So I like to choose low-hanging fruit. So you go right here. I'm not going to explain this. This is just the consequent encroachment between the gaps of the wicks. So I'm taking out these highs. I was expecting these relatively equal highs to be taken out, and then I expected more of a 0.5 level, like the mean or the consequent encroachment between this candle's high and this candle's high to be hit, and you can see that we didn't actually get that, but like I said, low hanging fruit. So I have a lot of crap on here. I gotta get rid of it. So let me fix this quick. I would only use these for standard deviations. So if I expect the market to go past the 1.0 level on the fib, then I expect it to reach a quarter above that, or to the 2.5, or just the 1.75 above it, then I would utilize that, but that's not necessary in this situation. So we're just looking at simple 0, 0.25, 0.75, 0.05, 1, and then 2.53, 2, and negative 1.5. We're not interested in that. So we're just interested in these quarters levels. So we got a quarter level, which is the 0.75. So if you flip the fib over, that's what I mean by this. So you're expecting it to reach a quarter of the way past this candle's high, the quarter difference between this candle high, or between this candle's high and this candle's high, and you can see that we got that. But I wasn't reaching for that. If you really want to be precise, you can aim for that, and then you can also take it another level down. So what I mean is you can take a quarter level here to 4226. You can take that fib, that's at 675, and you can take quarter levels of that as profits. So if you really just don't trust it and you think that it may not go up to the quarter level, you can always narrow it down to more quarters if you want to, but don't overdo it because you're gonna struggle. So keep it simple. That's all that I can say to you. If you were to trade that strategy, obviously I'm not going to tell you to push the button because I'm not licensed to do so, but that is personally what I prefer. So keep that in mind. If you would like that, that's cool. Sweet, go for it. Now we have new levels being hit. We also have valid order blocks. So we have all these down close candles. There's your order block. So short-term high, change of the state of delivery. So simple order block, not difficult. Mouse. Okay, so this would probably be more of a. I think this would be more of a reclaimed one. Right now, honestly, I would prefer that the cleanest order block be used that you see, and I prefer not to use these. I would rather use something else on this side of the chart because I don't really think it's going to give you like this imbalance. For now, I'm not thinking that it's going to want to go down there. I think it's going to be a violent upside move, but I could be wrong. I'm just going to wait for that. But the weekly is so balanced. It's like this weekly candle has a job to do. I feel like it has this job to take out the short-term high this week. I feel like that's its duty. And then next week we could see movement below this gap if it happens to stay open. I kind of want to just stay open, to be honest with you. Not expecting it to right now. I'm not sure. Not 100% confident in that. I just know that I think we're going to go up here. Lower prices, I don't think so. This is more of an order block. It's more cleaner. So I would use this down close candle. And I would use the half point to this wick and to the top. And possibly mean threshold, but I don't think it's going to reach all the way down there. I think it's just going to come down in this candle's range, quarter of it, maybe 50%, but I don't even think 50% is going to be hit. I think it's just going to come right down here a little bit and then kind of just leave it open. That's just my opinion, but I could be wrong about that. I'm willing to be wrong. So let's go down to a 4-hour chart. Again, I like to keep things simple. Not 1 hour, 2 hour, 50-minute, 35-minute, you know, that's just ridiculous. So what I'm looking for here is, well, this 4-hour chart is rather, yeah, I don't really like it. Kind of got balanced price range. Just love this already, so that tells me this is balanced. And then I'm not seeing this being treated as a balanced price range yet. I need it to go above it and act as an inversion level. That's why I call it IFVG. So inversion fair value gap. That's what I'm expecting it to turn out to be. Economic calendar. That's another thing that you guys need to be doing. So I'm going to go over to that economic calendar here on my other screen. Or I'll just use my phone. I'm just going to use my phone. A little bit easier. So you go to Forex Factory for your economic calendar. See what you got going on this week. I know we got a lot. I just don't remember what it is. So I'm not trading right now. I won't trade till tomorrow, maybe. Might get a classic Monday low of the week. I haven't had that happen in a while, but I do think that that could be a possibility. News. Okay, so Monday, yeah, I would just stay away from it. There's no news. It's just a dud. So I honestly think it's just gonna stay in a small range. It's already done a lot, in my opinion. It's came up into this level, delivered price up here, ran a lot of buy side, ran some sell side here, came down to the new week opening gap. I should label that for you guys. Put it onto a 5-minute chart here. So way over here, I have not yet to do this, but we have this new week opening gap. Sunday price. You can see that clearly. So we'll take a, oh, actually calm this. Okay. Oh, I should just do that. It's easier. That line's a little bit too long. Let's get rid of that. Okay. So take a trend line. I cannot tell if this is an open or down close candle, to be honest with you. But if I look closer, it looks like down close. So the opening on this candle is 419825. So we'll take the opening price on that candle, draw it out in time, make it dashed. That way you can differentiate. We'll call that NW OG, the week opening gap. And then we'll call that because they'll probably be the same size. Opening price on this candle is 418925. Look at the top right up here. Right here. Look at that. That's your opening price. Slap that on there. So it looked like it gapped down. I'm not surprised by that. And then draw this shift key to hold it in a straight line. See here. What else do we got? So we'll take our fib and we will simply go 419825. Try to get there. That's not gonna be, should be right. So you can see 418825, 418925, sorry, right here. And then this measurement is 419825, and then you can see on the fib 418 or 419825. And then you also have all your quarter levels, but I stick with the 5, the 0.5, the CE, consequent approachment. And you can see that the bodies ended up, where is it? The low, or the close. God, how do you do this again? So this candle's low came in down here, but it closed down here. So it closed down. And when it closed at 419375. Now, if you look at this fib, at CE of this new week opening gap, do you see how precise that is? I mean, that's literally to the tick. So yeah, I get enjoyment out of that. That's really satisfying. But we're not really worried about that. We can see that it came back down there. to the top of it and went a little bit past that. That's okay, but as you can see, it's actually delivering higher prices right now. So that's all that matters, being accurate. And then obviously I expect it to go up here. In terms of taking out this high, well, I think that it needs to reach about this area here. My phone's so slow. Come on. Okay. So it needs to get up into this fair value gap, and it needs to treat it as support. And then it'll take out this candle's high. And I think the high of day today, I'm not 100% confident because we don't have news, but I do see a lot of areas in which we could in fact trade into. So we have this volume imbalance here. I also have the implied fair value gap. It's not really much I would address and acknowledge because it's just too much like to shoot for. Like you don't need that. Like right here, from right here, right here. If you were trading this right now, which it's 11 o'clock in the morning, I don't want to touch it. It's already taken off without me, so I'm not interested in it. And it's Monday, so I really don't like that. But as you can see here, we have a fair value gap here. We don't really have any shift in market structure that really sticks out and has an order block in it that I like. I mean, we have a shift in market structure everywhere here. I mean, it's not like it's not there, but it's just not something I like. You may like it, but I don't like it. Like right here, they have an entry drill right here, and then we just target the buy side right here. I believe that is probably the best thing to aim for, in my opinion. Currently, right now, I think that could be an achievable target. So let's take a look at that. So we're at 4. Let's just say you were taking this entry drill right down here. Your stop, in my opinion, being that we've balanced this out right here, I would take this out, draw it on time, just to avoid added risk. But if you're okay with taking extra risk, then this may be something that you don't have to worry about as much. But if you're not worried about risk, I would put your stop right down here. Your entry would be up here. So, what is that? 4205-ish. And then you're aiming up here for these relatively equal highs. I mean, they're not even relatively equal, they are equal. So 408 to 4211, that's 4 points. I mean, that's enough to pay a couple bills for the day. I mean, that's enough to keep you out of work and not have you go to work. Because I think that's probably more of your job. I mean, $50 a point is $50 a point, and then you take that times by 4, that's $250. And then you throw, like, if you're trading with a TD Ameritrade, I think the commission to open a futures contract, the mini is like obviously 10,000 plus to open a contract on margin, and then you also have to consider commission. I think it's $225 to open and close. So if you're looking at $5 to make $200, it's not too shabby, is it? It's pretty cool. Obviously that hasn't happened yet, but if you're patient enough, it can pan out for you. So that's something that if I was engaging in price, I would probably be interested in, but I'm not interested in that because I hate Mondays. They're horrible. They're always like, you wake up and you're like, yep, not surprised. It's a dud. So I think that I've given you enough. I do think the weekly chart is going to expand higher. We're obviously getting that delivery price up above these highs right now, so that's pretty nice. You just watch that. I'm going to pull up something that a lot of my viewers are interested in on my analytics on YouTube. I've noticed that a lot of you guys are really watching my how to roll credit spreads, and I honestly think that, how do I put it? You might be getting the idea that credit spreads either are helping you out and you're not loaded. So I think that a lot of you guys are interested in that for that reason. I don't know, but to have 100 people watch my my credit spread videos. Let me pull that up here quick on my phone. So in the last 28 days, 111 of my viewers, and I don't even have like 100 subscribers, I have like 80. It's not that many, but I don't really care. I'm just doing this to help you guys. But 111 people have watched it in the last 28 days. Looks like that video is, I don't even know how long this video is. Looks like it's 13 minutes, 56 seconds, or 50, not cents, 56 seconds. And it's definitely growing. I have 1.6 people, or 1,600 people watching it. It's a lot more than I've seen usual. So I think I'm going to actually walk you guys through this. I think I'll take some time out of my day. So I'm going to pull up Robinhood here. If I could get to my other screen. I don't even know where it's at. Oh, right here. So on Robinhood, it's going to give me a second here. Got it on that screen. I just want this. That's not something you guys need to see. So I'm taking a small account here. Just to kind of show you guys that interest. Seriously? That's it? It's not even worth it. And I'm not even doing anything to accrue this. I didn't even know I was doing this. It just gave it to me. It's just dumb. Like, your interest rates do not impress me. Like, your money, it does not impress me. And you're not going to use my money to make more money. So I'm not giving it to you. But I'm just talking to Robinhood. Not you guys personally, but so let's go over some spreads. I gotta get this out of here. It's distracting. Okay, so let's just type in a stock. Dude, don't ever sign up for this place. It's horrible. Garbage. I have so many tabs open, it's ridiculous. But when I get back to Robinhood, I don't even know where the other tab was, to be honest with you, because I have too many tabs open. Just give me 1 second. I just want to make sure my information is not showing. So we're going to put this down here. That way I can pull it up. And then let's just pull up a stock that's not expensive right now, because Amazon is outrageously cheap. It's been like pounded this entire year, so I personally think Amazon is worth acquiring. So I like the idea of being long Amazon. So if you guys want to do spreads, all you gotta do is a simple analysis. So the light bulb goes off in your head, short-term high, taken, shift in market structure. There's also one right here, short-term high right here, candles high right here, and a short-term high right here too. If you guys don't know what I'm talking about, just go watch my CT videos and you'll figure it out. So we're on a weekly chart, so we have 2 shifts in market structure. So that to me is like kind of like a double confirmation. I don't really subscribe to confirmations because they just don't work in my opinion. They're subject to failure. Sound logic, that's what I use. Logical thinking, logical reasons to why price would want to deliver higher. So on the weekly chart, we're pretty balanced. I don't know why this box is right here. So this is our imbalance. We're looking for the market to stay above this, which we've obviously been able to get back above it, and now I'm looking for this short-term high, this short-term high, this short-term high to get taken as well. I'm also looking at the monthly chart too. So I want to reach up in this order block. Buy side rests above here, and then we also have relatively equal highs. So this is very, very far-fetched. I would not aim for this. I would definitely aim for partials along the way. So I'm going for partials right here, in this gap, in this little volume imbalance right here. Take that. I'm not going to label it, just annotate it in your head, volume imbalance. Actually, I will label it. Just do vol IPA. So volume imbalanced price action. That's what I use to label it. So that is a objective. And then we also have, I don't even know how to draw these like imbalances in price. But this, if any of you have seen ICT do it, I think I'm actually going to tweet to them and ask them, is this the proper way to draw a fair value gap between two candles? Or is it just simply aim for the volume imbalance and leave it at that? Because I personally don't know, but I just know that there's an inefficiency in buy side, so we need to be able to offer higher prices. I think I always get these confused. I think it's a civvy. Like I know what they are. I just get them mixed up. So it has no opportunity, like, to offer efficient price action up here. So it's inefficient in, I believe, sell side, but it's lacking buying. So it's just all selling. So we need buying. Like we need to have buy side offered. Like we need to have buy side price delivery. Like that's just how it works. Like we need that. So if you guys were to do a spread on this stock, particularly the stock, I would personally wait till later in the week, and I would use this down close candle as your stop loss. So we'll go to Robinhood here. We'll type in Amazon. I'm going to be really quick. So Amazon was nice enough to split their stock, but you can still do it. So you go to options on Robinhood. There's tutorials all over YouTube on how to trade on Robinhood. It's not hard. So we'll go for 110. That's a whole number. I like it. So we go down here, and basically all we're going to do is we're going to buy a put at 109, and then we'll sell a put above it. So that should give us a spread. It's a 6-cent spread, so that's $6. Now it doesn't sound like a lot, but you gotta realize that that is 4 days. Now, in 4 days, over the past year, have you ever seen the S&P gain 6% in 4 days over the course of the year? This past year, have you ever seen the S&P return 6%? Like it, no bear market, it just rose 6%. Like I'm not talking like, oh my god, it rose 6% this week. Like of course it rose 6% this week. It's trying to get up to buy side. It's trying to offer that higher price. So like the NASDAQ here, or not the NASDAQ, sorry, the S&P here. So you're probably thinking in your head like, yeah, the S&P can return 6% a week. That's easy, because it gave 9% right here. But look at how long that took, 42 days. Now let's go down to 6% return. Being in a profitable trade, just holding the S&P, no leverage, just outright buying a share of the S&P, took you 27 days to gain 6%. This Amazon option, if you were to open this, preferably tomorrow, because I'm just not like completely 100% that Monday's going to be the low of the week, because I know the low of the week can form a lot of the time on Thursday, especially if you have a combination of non-farm payroll and FOMC. I've noticed that the low of the week can form on Thursday or Wednesday. And I've also noticed FOMC days, if that's just the high impact news driver for the week, I noticed that the low of the week or the high of the week can form on Wednesday. I've also noticed that non-farm payroll can actually form the high and low of the week on Friday. Just depends on the market conditions in that week. So, in my opinion, I think that opening this up and waiting till later on in the week, like Tuesday, it just depends on price action. But this spread could widen, so you would get more of a credit. So, all you need to do is take $100, because this is like, so you're opening this up, and there's many ways to make this really profitable. Like, I'm not going to get into that because there's so many strategies. Like, you have the iron butterfly, they're all over YouTube. They're so helpful. You just have to understand how to use them and use the charts to actually make money off them. But you're probably thinking in your head, well, it's at 115, it could go all the way down to 100. Like, no. That's not how it works. You need to use logic. If the logic is not there and the chart prints lower prices, you have to take that. You have to come to terms with the fact that you could take that losing trade. So, max loss 92. Obviously, if you let it go against you completely, you're gonna lose all your money. For you to break even, the stock price would have to close at 109.93 because you're getting a credit to your account of $7. So if the stock price closes at, I believe, 110, I think it is exactly, or just a cent higher, I think you're good to go. I'm not sure on that, but I really don't count on that trading there. I'm not really expecting that. I'm expecting it to just take off. So I'm not really concerned about that. But 7% return in 4 days, right here. I mean, that's nothing to complain about. It's $100, and you're trading at $107. How long do you think it's going to take before that $100 turns into $1,000 or 10 grand? If you keep doing this consistently, because every time you do it and you turn that into $200, guess what? Now you have 2 contracts. That's $14. That's 14% return on your money. If you look at it as $100 that you started with, so you're getting there quicker. Bigger numbers mean bigger returns. Just don't let the ego get in the way. Don't let your pride and your arrogance let you blow out. Like, stay consistent. Don't look at this as like, oh, it's only $7. You make that in 1 day. It's easy. Like, so how much work did you put into that after a while? Like, I mean, if you're gonna push a couple of buttons and that's all you gotta do, and you can make a 6% return in 4 days on a certain amount of money, anybody is gonna be happy with that, because the S&P has yet to deliver any return in the past year or so. So, yeah, leave it at that. And then I'll get into more things, but that's just an example of a spread that I would use. It's only $100. Obviously, you can go higher. I lost my Robinhood website. I think it got lost in the trenches, or it's hidden behind all these screenshots. So, spreads do open. They can be $500 apart. They can be $1,000, I think, apart. I'm not sure. Don't quote me on that, but they can widen, and they can be a lot of margin to put up. So if you're small and you just want to stick with $100 and grow that, then that'll work for you. But I think that's all I got for you guys today. So I'll try to upload more. I'll watch my analytics on YouTube and help you guys out, so that way you guys can generate income and be able to pay your bills, make your ends meet. But other than that, I think that's all I got for you guys today. We'll have to see how the market pans out. I hope you guys enjoy it. I hope you guys have fun, exciting time. Just like for your mental health, like you should not be excited that you're winning a trade. You should look at it as boredom, but you should be excited about your week. You should be excited about the fact that you're able to do this and make your life improve and be a better person, because this skill set will help you be a better person as long as you use it with pride and you help other people out. That's the whole idea behind this skill set. So I hope you guys have a wonderful time and enjoy your day and just ultimately be a better person for yourself.